Welcome back. Our research team is now standing by with CNBC-TV18's list of top stocks for the day. First up, let's get a handle on all the insurance numbers that came through. Yash, tell us about HDFC Life.
Well, the numbers for HDFC Life looked good as far as the top line is concerned, but the disappointment has come through because of the margin performance. To be specific about the numbers, the new business premium, that came in exactly a little below what the street was anticipating. So the number that came through was about 7272 crore. The poll that we were working with was about 7489 crore. Total AP was also a little ahead of the street estimates. Retail AP, again, being a little ahead of the street estimates. But as I said, margin was that little disappointment which came through. Margins came in at 25.1% versus the poll that we were working with of about 25.63%. So about 50 basis points miss as far as the margins concerned. The stocks rallied very hard in the last 3 months and 6 months. And hence, that small margin disappointment could actually turn out to be a little bigger than just being small as far as the stock performance today is concerned.
Okay, all right, Yash, thanks a lot for that. Yash, but you want to tell us about another company as well? Lombard as well is a stock that you're tracking?
Well, that's correct. So strong numbers coming in from ICICI Lombard. The net earned premium, that saw strong growth of 14%. Underwriting profits, underwriting losses rather, they reduced to about 293 crore versus 346 crore on a year-on-year basis. Operating profit, that grew by about 30% at about 654 crore versus 501 crore. And importantly, combined ratio, that saw a slight dip, came in at about 102.9 versus 102.3. So the numbers overall for ICICI Lombard looked very strong. I'm going with green as far as that company is concerned.
Got that. Let's talk about Just Dial. Well, Just Dial was an okay set of numbers. Not very bad, but there was nothing to excite the street. The company on the top line reported a revenue growth of about 3% quarter-on-quarter. On a year-on-year basis, it was a growth of about 6.2%. And that's broadly been the growth trajectory for the company. If you look at it, so this quarter, year-on-year revenue growth was 6.2%. Before that, it was about 7%. Before that, 8.4%. So in a way, growth has slowed down. But again, Q1 was, it's an okay set of numbers. Margins have come in at 29%, slightly lower than the 29.8% in the prior quarter, and profits have been on the flatter side. Paid campaigns growth stands at 4.3% on a year-on-year basis. Cash in the books continues to remain healthy, nearing 5,500 crore rupees. So all in all, okay set, a bit slow. But even Just Dial's growth has slowed down to single digits and now mid-single digits. But Ekta, what about Bioon?
Well, yes, Bioon is in focus because they've received approval from the US drug regulator for insulin aspart, which is basically a biosimilar insulin, which they have been awaiting approval for a couple of years now. Now, remember that this approval is for the first and only interchangeable biosimilar to Novolog, which exists, which is basically insulin aspart. This particular insulin aspart has been available in Europe and Canada since 2022. But remember that Bioon had faced some issues with regards to the US FDA approval because they received a complete response letter for this particular product approval for deficiencies at their facility in Malaysia, which is where it will be manufactured. This took place in 2022-2023, but eventually the Bioon Malaysia plant was re-inspected in September 2024, and now they've cleared any kind of queries in the CRL, and that's the reason that they've received approval from the US FDA. $100 million is what they could make on a conservative estimate. Depends on the dynamics. It could go up to around $300 million for Bioon as well.
Okay, all right, Ekta, thank you very much for that. PVR Inox is the next one we want to focus on. Vamakshi's got details on this one. Vamakshi, morning.
Good morning, Prashant. Well, not very good news for PVR Inox, and that is because the Karnataka government has, in a draft notification, proposed that movie ticket prices should be capped at 200 rupees. Now, keep in mind that this is only the draft notification, so a time of almost 15 days has been given to the public to submit their feedback on this proposed, proposed regulation. But this could be, if this does go through, it could be a negative for for PVR Inox, and that is because almost 40% of PVR Inox screens are located in South India, out of which almost 12.3% are in the state of Karnataka itself. Now keep in mind that earlier on when PVR Inox did speak to us, they were betting big on the southern market because average occupancy here is above what the consolidated level for the company is. It's at almost around 30%. Now keep in mind they had also highlighted some plans to expand in the southern markets. So they were adding on almost 100 screens, out of which 40% of the screens were in the southern markets. So therefore, given this kind of gap, it could put some pressure on the revenues as well as the average ticket prices, going with the red for PVR Inox.
But I'm sure the industry will challenge this. In fact, a similar such measure was implemented or announced by the government in April of 2017. I was just reading what Karan Taurani, his view is. A similar measure was implemented earlier by the Karnataka government in April 2017 when it introduced a cap of 200 rupees on movie ticket prices across all theatres, including multiplexes. However, the film exhibition industry challenged the decision in court and in 2021 secured a favourable verdict from the High Court, which allowed exceptional pricing for luxury and special formats. But this one will be on the radar for sure. Dixon Tech, that's going to be interesting. Vinny, what's the news and the importance of this development?
Absolutely. So positive news coming in for Dixon Tech this morning. What Dixon Tech has done, couple of news flows. One, they've acquired 51% stake in Kotak India. This is going to be through primary as well as secondary investments. And Kotak is among the top 5 camera module suppliers globally. And in India, it's the largest amongst this camera module suppliers. Now, obviously, this is a significant step that comes in. Why? Because one, it's that backward integration which the company has been focusing on, and this will add value to that smartphones backward integration that the company has been focusing on. Now, other than that, the second news flow that also came in was that the company is going to be forming a JV with Chongqing, which is a company which is mainly into component manufacturing, precision component manufacturing. What is this used for? This is actually going to be used for components for laptops, mobile phones, in terms of automotive applications, etc., where they can use these components for. Now, this is going to be a 74-26 JV. Dixon will be holding 74, and the other company will be holding 26% in this JV. So, backward integration is what the company has been focusing on, and in the recent time also, they've done a lot of backward integration. They had also made an JV with HKC as well. So, that is the focus on a positive coming in there. For Dixon Tech this morning.
All right, thanks a lot for that, Vinny. And, I was reading a DAM note that suggested that value addition as a percentage of their mix was at around 15%. They're expecting it to go to 35% by FY27. Good on you, Vinny, with regard to that pronunciation as well. Thanks a lot for joining in. Let's wind this down, though, with Ria on some stocks in the news. Ria, take it away.
Well, yes, Nigel. First up, we're keeping an eye out on Hathway Cable after their Q1 FY26 numbers. This time around, the net profit has jumped up by around 69%, and the strong growth in net profit has largely been driven by other income. Margins have also been driven by dealing in securities and not from the core business of the company. And it's important to note that the cable TV business, which drives most of the revenue for the company, is still loss-making on the EBIT level. So, mixed set coming in for Hathway Cable. Moving on, Zydus Life will also be in focus today. They've received the final approval from the US FDA for capsules that are used to treat arthritis. The stock expected to open in the green today on the back of that. And the last one is Kotak Mahindra Bank. The president and the chief credit officer of the bank, Mr. Shankar, has tendered his resignation with effect from the 21st of July of this year.
Thank you very much for that. And finally, HTB Financial, the newest kid on the block. Let's see what their numbers showed up. Gaurav?
Well, yes, HDB Financial reported its Q1 numbers, and let's look at it in two perspectives. On a weaker side, we saw asset quality and disbursement, and on a stronger side, we saw net interest margin. So first, let's look at the numbers. Net interest income has increased almost by 18%. This is also reflected in its net interest margin, which expanded almost by 10 basis points. But on the other hand, credit cost has increased again on the back of some stress which is rising from the CV loan, and that is the reason when we look at profitability, there we saw a decline of around 2% on a year-on-year basis. Now, what company has said is that the disbursement slowdown and as well as some stress in the asset quality is because of the CV loans, and on back of this, we will be watching out on the other counters as well. But what company has also said is that the net interest margins are likely to expand even further, and the reason being that 90 to 95% of its book is EBLR linked, and with rate cuts, this will be passed on further in the net interest margins, and that is the reason why they believe that ROAs are going to expand. Let's not forget that ROAs have also come down to 1.9%. but there is an impact of the recent fundraise, and if we exclude that, the ROAs has remained around 2%. So definitely on the weaker side, we have seen some aspects, but on the back of the positive commentary, we will be watching out on this stock.
All right, Gaurav, thanks very much for that. You know, what you're going to do is take a quick commercial break here, but here's a quick recap of the stuff that we put out in terms of stocks. ICICI Lombard, Just Dial, Bioon, Dixon, Zydus Life and Kotak Bank are stocks with some green based on, of course, the news. HDFC Life, HTB Financial, PVR Inox likely to open in the red again based on news flow. Hathway Cable kind of flattish.